Ladies and gentlemen, very warm welcome. On behalf of my father, our chairman, Vivek Goenka, very warm welcome to all of you. It's my absolute privilege and honor to welcome our chief guest, Sri Nirmala ji, our finance minister, to the Financial Express Best Bank Awards. And on a very special day today, I think for anyone in the cabinet, not only is the BJP set to start a historic third term in Haryana, but we've also just seen a remarkably significant election get completed peacefully in Jammu and Kashmir. I think both Haryana and J&K elections, Nirmala ji, congratulations to you. Ladies and gentlemen, I think, in no small part, we are sitting today at the center of the world's attention because of the work of our finance minister. She has played an incredible leader, both peacetime and wartime leader. We came out of the pandemic hitting 3 sixes, 6% inflation, 6% GDP growth, 6% interest rates. And last year our GDP grew at 8%. We're projecting 7.2% on this high growth base rate this year, and inflation's at 5.1%. Markets, at least until last week, were at all-time highs. She has pushed private sector on both productivity and on investment. PLI has given us a good foundation to benefit from China +1. She has given the confidence to the banking sector to support India's recovery after COVID. Has thought creatively about bypassing the dollar wherever it's been in our strategic interest. She's pushed the economics, but also the politics. She's given her party enormous air cover. And even done infantry work. We've all seen her campaigning on ground. I think the last time she was here at Best Banks, she had just come back from a long trip through the Northeast. So she's done both the 30,000 feet and the on ground. So I think it's safe to say that no time in the last 15 years has the corporate Indian balance sheets looked as good as they do today. And certainly no time in the last 15 years has the banking sector looked as good as it looks today. The NPAs have been cleaned up. We've got heaps of cash. So everything is looking great. And yet, obviously, challenges persist, and there are leaders because there are challenges. The Financial Express did a very interesting analysis. It looked at one of the largest conglomerates in India. It took 23 of its largest publicly listed companies, and it analyzed that revenue grew by 11%, profit grew by 35%, and these 23 companies together, their valuation grew by 45%. So this is one conglomerate. I won't say the name, but I will let you all try to guess it. Revenue grown by 11%, profit by 35%, valuation by 45%. Yet that company has hired 45 people less than it did last year. So in spite of this tremendous growth in 1 year, the number of people being hired is less. So jobs is going to be, I think, a challenge. And this trend, according to this FE analysis, is similar in most corporates, in many corporates that we've seen across India. So I think this is a problem that's going to take equal parts economics and politics to solve. Either way, I don't think there's a better person for the job than the finance minister. And I feel the Best Banks is almost incomplete without Nirmala ji. It's incomplete not only because she holds the record for the maximum number of budgets delivered consecutively in India, but I think because the special partnership that Nirmala ji has created with this room, with the banking community, through COVID to get India out of the crisis that we faced, I think it'll go down in the history books as something very special. Since Nirmala ji is an accomplished academic and an MPhil from JNU, if you do indulge me, Nirmala ji, I'm going to end with a short history factoid I picked up recently from a podcast. I learned about the etymology of the word private. I don't know how many of you all know this story, but so the word private actually comes from the early 16th century, when Queen Elizabeth was failing to challenge Spain's domination of the sea routes, global sea routes. So what England decided to do was to sanction pirates, right? Pirates who would attack and rob ships. England decided to sanction pirates to go and attack the enemy ships, and that's where the word privateers came from. I thought it was an interesting factoid to trace the first time government and private enterprise entered into a partnership. And the word privateering came from there. And I think it's interesting if you compare that partnership to the partnership that's happened with the finance minister's office and this government and the banking sector during COVID. Because obviously the partnership is equally intimate, equally exciting, equally historical. The motives, of course, are far more honorable, profound, and good. So for all these reasons, I think there cannot be a better chief guest to have with us than the finance minister. I will not stand between you and her much longer. Nirmala ji, a very, very warm welcome. Thank you for being here. Can I please invite you to join us on stage? Please invite you to join us on stage and give us a short welcome note.
Good evening, and thank you for having me here today, Financial Express. Since the introduction was more for me as a finance minister and the tenure that has been so much described in Anand's statement, there are a few things that I would want to speak about. I know there's going to be a question-answer session afterwards, but I think it's the best occasion for me to draw your attention on how the Indian economy has had this 10 long years where the challenges of the initial years and the position that we are in today may be different, but they are not by accident. They are due to the kind of efforts that have been taken and the kind of reception and absorption by the people, the stakeholders, in every one of the policies that the government has taken. So I will certainly elaborate on some of them, and it might be just appropriate for me to say it here because it is something which you have done, we have done together, and that's why India is where it is today. It's certainly an honor for me to be here to talk about banks, and with the jury having identified the best banks, it's just the right thing for me to be here and see what's going on. But Indian banks and their turnaround story is not just for us to celebrate today, but it is going to make a lot of academic interest come in the form of further writing up on how this was managed. And the significant turnaround that the Indian banking sector has achieved is actually the best thing to happen, not just for everybody, but in this function I can say the jury, therefore, would have had exciting time to see how the turnaround has happened, and therefore, who are the ones who stood out even in this exercise of turnaround. So, Indian banks have always played a very crucial role in India's economic development, but all the more now and all the more from now hereafter. So the attempt has to be to balance the government's priority sector lending, but yet talk about sustainable growth and India's aspirations. The common people's aspirations are such that we need to have newer growth level achieved, and therefore the levers are in the hands of the banks. RBI's financial stability report, which came out late June 2024, that the Indian banks and the Indian economy are remaining robust. Banking sector's health, scheduled commercial banks' gross NPA ratio fell to a multi-year low of 2.8%. The net NPA ratio is 0.6%. Are these numbers which we would have believed had we speculated in 2014 that it is possible? Absolutely not. The NPA and the net or gross was all so heated up, and it was just not imaginable that across the board all the banks would benefit from the reforms undertaken and that their net NPA ratio would come down so much. The capital adequacy ratio for the scheduled commercial bank, capital to risk weighted assets ratio, that is the CRAR, at 16.8%, common equity tier 1 ratio is 13.9%. So the healthy financial system is the one which can finance growth opportunities. Look at the figures for non-food credit. It grew by 15% for 23 and 24 and has sustained that expansion as of July 24 as well. Credit to industry, driven by steady demand from industrial MSMEs and a pickup in the credit appetite of the large companies, has also grown faster during the last 8 months. Listen to this. This was a surprise for me. So that has grown faster in the last 8 months, that is January to July 24, than the 5-year CA, than the 5-year CAGR from 1920 to 23-24. In other words, the reform, the coming out of the woods by the banks, has resulted in speedier credit growth. And that can be seen in the last 8 months compared to the 5 years before it. So today I can safely say, although India has always attempted to take banking to all the people of the country, I can safely say that every Indian is intimately linked and connected to the banking system now like never before. Whether it is the JAM Trinity which has brought that miracle, or whether the UPI which has brought that miracle on board, or the ONDC, the open network for commerce which can be used by people, account aggregators who manage to give small ticket loans, and the Digi Locker, which is something which we thought earlier it will be only used by high net worth individual, but now it's available for everybody and people are familiar with it. So the inclusive, seamless banking service is happening because of all this. So the new digital economy has actually leveraged it in such a way that billion bank accounts, billion mobile phones, and 1 billion digital identities is what is India today. So with this and with the kind of advantage that technology has given us, we are able to move fast to reach the aspirational classes of people so that growth and development and its benefits can be truly democratized. So due to favorable policies and the regulatory support which has been given by the government, things are moving faster than people expected or speculated on. A lot of political capital has been spent by Honorable Prime Minister himself in that for pushing the digital, for taking up schemes which will make people to become savvy in using the digital infrastructure which was spreading. I think that political capital being invested is actually seeing common people benefit from all the schemes, benefit from the traction that the global situation has in turn given to the Indian economy, and as a result we are able to take the developmental story faster, much before the world is able to assess it. So not just recovery, but simultaneously working for affordable and formal financial sector reforms, and that is what is giving us the leap forward. So 53 crore people have opened their accounts under the PM Jan Dhan, zero balance accounts with minimal documentation, and that actually has taken a lot of advantage in the sense the Bima Yojanas could be given to them with minimum premium, whether it is for accident cover or for life. This actually has changed the landscape of common people feeling that there is something happening about them for them to be financially more empowered. Exponential growth in the digital banking area has made has been made affordable because you have mobile data, which is the cheapest in India compared to anywhere else. When data becomes cheap and common people are able to use it in their feature phones, not just smartphones, there is no reason why common people wouldn't want to benefit from it. And purely because of that, much against the speculation of very many people who suspected that Digital India will never take on, today you find Digital India literally in every corner of the country. I've had this experience once when I went into the streets to buy something on the street just for the fancy of it, because I thought, oh, it looked fresh and green, I should take it back home to Delhi. QR code was very clearly, visibly displayed. Small merchants prefer it because they don't have to search in their drawers for giving cash which is left behind or coins to spare. And therefore, the simplicity and the ease of doing business at that level has mattered. So every facet of the banking system is now available on the phone and people know it. They get their messages about their credit into their account. They get messages about what is expected to be paid for small premiums. So that has really actually helped the system itself and the country as a whole. UPI today, I was just exchanging some thoughts with some of the visitors here. 50 crores have been achieved as of September 2024. Would we imagine in this country that that kind of a rapidity with which digitization will be accepted by the people? But that's what has brought in the change. The digital KYC, the Know Your Customer, is also something which I thought is worth recalling, and that's made life easy. There are, of course, complications still which we need to address, but on the whole, today you do not physically have to present yourself to a bank. Today, I was even pleasantly surprised that very many banks do have a video KYC, that an elderly citizen wanting to prove that he's alive so that he can get his pension continuously doesn't have to go to the bank. He can sit at home and have a video conversation with the branch manager and his work is done. And that is the kind of acceptability of digital applications which has gone into our banking system, and that is what is helping. There was also this concern most often expressed to me about savings at the cost of growing investment. Is that right? So I would want to just give one thought here. Digital investment platforms have actually done a great service for India. It has made middle class see where it is possible to invest either through the mutual funds or opening a direct demat account and working, or stocks or bonds. As a result, post-COVID, you have many Indians willing to take that risk and enter into the market rather than comfortably sit in low interest paying deposit accounts. So I'm not suggesting that this is better or that is better. It is up to the individual to take a call where he wants to put his money, and as much information on all of them should be made available for our citizens. The number of demat accounts, I'm never tired of saying this, the number of demat accounts surged to 17.1 crores in September 2024 compared to 2.31 crores sometime in 2014. So that kind of a 7 times increase in 10 years is a remarkable change in the way in which people are looking at how to deploy their funds and earn more. Unique mutual fund investors has also grown. It was somewhere in the range of 1 crore in 2014. Today it is 4 crores, again 4 times increase in the last 10 years. The number of mutual fund investor folios has also gone up from 8.38 crore folios as of 30th June 2019 to 19.10 crores as of 30th June 2024. So this kind of change is not insignificant. We need to note it, and we need to ready the economy to be able to give space for these kind of people's own decision making a big difference to our markets. The Indian mutual funds asset under management has doubled to 66 lakh crores from 25.48 lakh crores in 2019. So the post-COVID move is across the board. It's not just going to one activity in the market, it's across the board. In a span of 5 years, the asset under management has actually increased 2.5 times for the mutual funds. So access to credit equally has also become easier. Credit availability through priority sector lending, whether it is the PM Mudra scheme, Stand-Up scheme or Swanidhi, has made it possible for collateral-free seeking of loans from the bank. And that has enabled a lot of small traders to believe that they can carry on without the middlemen who otherwise were very, very difficult to handle. But today the banks, because of the sovereign support which has come in, the backing which has come in, have lent to small businesses. Consent-based aggregators, that framework has facilitated 42 lakh loans amounting to 42,300 crores till March 2024. When we launched it in about 3 years ago, there were only few people who came about. Today, the cumulative average ticket size of loans facilitated by the account aggregators is pegged at 1 lakh on an average. So account aggregator ecosystem has 163 financial information providers and about 475 financial information users of that information which is being provided. 2.12 billion financial accounts, including 1.64 billion bank accounts, are all in the account aggregator regime. You can just imagine the rapidity with which people are benefiting from these instruments which we bring in the financial world because of India's lead advantage in fintech. Responsible use of credit cards are also making a big difference. Today, 2 crore credit cards which were in 2014 have gone to 10 crore credit cards issued, and this is cumulative figure, not unique card holders. So there's rapid change in the way in which India's fintech has made many things possible. I repeat, the full credit for financial transformation goes to the people of India. So the way forward is something on which I'll spend a minute. The health of the banks actually determine the health of the economy and the financial health of households. Sustaining the longevity of banking and financial institutions is both from the user side and also from the policy side. Over-lending, meaning the risk is insolvency. Under-lending affects profits and economic growth, are a problem. Banks will have to be carefully balancing between the two, and the right prudence in lending to create profits while keeping yourself away from risks is what creates the best banks. And that's what you've selected today. To those banks, I certainly have a few words. Cybersecurity risks are got to be planned. We need to be staying ahead of the curve on it. Use futuristic technologies, whether it's AI, big data, cloud computing, machine learning, very required for the customers for providing personalized accounts. For financial institutions to use as tools for mitigating risks and also fraud managements. And for the regulators to use them as oversight mechanism and real-time monitoring capabilities of the regulators can be improved by adopting the technology. And there will be huge demand for cybersecurity professionals. which banks will have to make sure that they are not going to be stingy about recruiting them. They are going to be your firewalls, literally, physically, because otherwise the digital firewall will be ineffective. And I take this opportunity, and I'm sorry for those who are waiting to get the awards, I take this opportunity, a moment, to invite banks and also institutions which are closely working with the banks to offer their participation in the PM internship program that we have launched. And from the 12th, the young people of the country will be allowed to use the portal to register and seek positions for 12 months of skilling on the shop floor itself or on the desks, at the desks of these companies. It will help in creating a greater awareness about what is required for jobs. These are internships, they are not jobs. But by this internship, we honestly believe the youth of India will be able to get a picture of what is expected of them. Most of them well-qualified engineers still suffer from lacking that set of skills which they need to be employed. And therefore, I invite all of you all to participate in this PM Skill Internship program, which will give us, our youth, the advantage. Other than that, of course, the fintech industry is contributing much more rapidly than what we can imagine. I continue to support them. We certainly need them to do everything that it takes to make India a lot more tech savvy, particularly for our financial sector, which will be the key driver towards Vikasit Bharat. So in conclusion, I would only say I celebrate the excellence that you're awarding today, and all the participants would be keen to know who the winners are, but the winners are going to be the champions for us for the next 25 years, so that all of us can see a developed India, so that the future generations can be proud about the work that all of us have done together. Thank you very much.